What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, everyone. In a recent video, I had stated that the market was at a bit of a pivot point. It's been in this volatile range for the past few months. And in this video, I'm going to expand on that thesis and why I think the next few weeks are going to give us a good idea on the outlook for the rest of the year. I'm going to explain everything. So let's get right into it. First up is earnings season kicks into overdrive this week. Financial sector began last week. They're going to finish up, as well as some big companies: Netflix, Johnson & Johnson, IBM, Procter & Gamble, Tesla, American Airlines, Snap, just to name a few. Investors really want to see hard numbers this quarter. Last quarter, when January began, the market was pulling hard. And if you remember, we got a bit of a bounce, and it was a lot of the big tech industry that stepped in and said, listen, even though we are facing Fed policy changes, supply chain issues, we still expect a very good year for 2022. Now investors want to see hard evidence. You better believe if some of these big companies report good numbers and beat on some of their EPS and expectations and continue their guidance for the rest of the year, that's really going to give a lot of the power to the bulls, and reaching back to that all-time highs is not out of the question. Next up is going to be China GDP. This number is going to be released on Monday. It's going to give investors the first insight to the entire global economy. Next thing that is up is the housing market. Now, the housing market has slowed down a little bit. Sales fell about 7% annualized basis in February. And you also have rising mortgage rates, and continued price gains have dented the demand for housing in recent weeks. They don't want to see the economy slow down a little bit too much. And later on in this video, I'm going to give you my opinion on the entire housing market. I work with a lot of loan officers throughout the entire country and just base my own opinion given on their feedback, and also talk about some hard numbers. That's later on in this video. What I think is even more important, not only this week, but the next couple weeks, is the Fed policy. All right. Now, the Fed is not meeting in April. They meet May 3rd and 4th. All right. Now, UBS had already predicted that inflation was at its peak and it's going to start pulling back. Now, April numbers come out May 11th, all right? So their meeting will already be done by the time these numbers come out. And UBS has been very accurate, all right, throughout this entire last year and a half that inflation has been running rampant. So seeing that 8.5% they hit on the dot and 8% coming forward will be a very good sign that we have hit a peak and a reversal is starting to happen. And maybe, just maybe, inflation inevitably actually is transitory. Not really transitory, but in the big picture becomes transitory. But investors are going to be looking at that closely. Now, 91% have said that they anticipate a target range of 75 to 100 basis points. And the Fed has stated there's going to be a couple times throughout this year that they're going to go not only raise 25, but they're going to raise 50 basis points. All right. And investors are clearly expecting that to happen in May. Now, if that happens, it's going to provide certainty to investors. Now, I've stated this numerous times. There's nothing worse that investors hate, okay, than uncertainty. When they're expecting one thing to happen, this has already been priced in. They're pricing in 50 basis points, and all of a sudden they get slapped, all right, with a 75 or 100. That's uncertainty. That's when things get shaken up a little bit. All right, so they're going to want to see that continue. And like I said, if that maintains in line, as well as the Treasury note not rising past that 3% number, the market is going to hold, and it's eventually going to retest all-time highs going forward. All right, so keep an eye out on that. Like I said, also, they're not meeting in April. There's going to be a bit of a dry period. All right, and all the speculation will be passed around. You know exactly what the media is going to do, but none of this is going to be hard evidence. Now, lastly, I want to talk about, before we get into the housing market, just where the SPY sits on this chart. This is a weekly chart. All right, we pulled back from all-time highs. We broke below that 50 moving average, held a bit of a support here, broke through that in early March, came back up to test that 460 or 459 to 464 level finally, and now we're bouncing off the 50-day moving average and looking for this support all the way back from October to hold. All right, now we do have a little bit of an awkward pattern here, and we did make lower highs. As you can see, we bounced off this was once resistance. All right, now acted as support, bounced off that resistance again, and it is a bit of a forming of a downtrend to happen. But like I said, the market likes to run in these W formations. Look what happened back at the end of 2020. We bounced up, we hit that, came back down, hit that 326, and we continue to move higher. I'm looking for that pattern to continue. We also haven't seen more than 2 red weeks, okay, red candles in quite some time. Looking back on the weekly chart, really want to see this 435, 436 level hold on SPY. Now let's talk about the housing market. I hear from a lot of people, housing market is going to crash, housing market is going to crash. And personally, I don't think that is going to happen. Reason being is a couple reasons, but first off is because the housing market is priced naturally off supply and demand. What happened between 2005 and 2008, all right, of prime lenders giving out loans to subprime individuals, them packaging those into mortgage-backed securities, all right, and selling them off in order to really just maximize their returns. That doesn't happen as much as of right now, all right, and there's a lot more stricter rules when it comes into lending, all right, but everything is priced off of supply and demand. And just like I had stated at the end of 2021, that I don't believe that the market is going to crash. We might see some corrections, we might see some pullbacks, as we have seen already. I don't see a crash. It's the same thing with the housing market. And a lot of people talk about housing prices rising, and it is insane in certain areas of the country. They talk about mortgage rates rising and prices need to pull back, and that's all fine. But here's what you need to think about: supply and demand. And if you look at this chart right here, the average number of homes built between 1950 to all the way up until 2010 were somewhere around 11 and 12 million. And from 2010 to 2019, you have 7 million homes built, all while the population has been increasing decade over decade, from 1980, 226 million to now 331 million. And that's as of 2020. And it is continuing to climb. So you have kind of this inverse effect. You have population rising. All right, more people need homes to live in. However, the homes available is just going down. That's when you have that divide just keep getting wider and wider and wider. And while mortgage rates were at all-time lows and they are sitting around that 5% range, and they might even get up to that 6-7% range, that is going to cause housing prices to come down a little bit in order for things to kind of, balance each other out just a little bit. Right now, you have, let's say, 10 to 12 buyers. This depends on the area. And if anybody of you watching this are real estate agents, you probably have a little bit more insight, especially when it comes to your area. But in my area where I'm in Connecticut, you have about 10 to 12 buyers for every single home listed, right? And that number might go down. There are less people, looking to get mortgages and so forth. That might go down to even, by 2/3, but that's still, 3 to 4, 3 to 5 buyers out there for every single home for sale. It's in a seller's market. And while they might not be able to get 20% over asking, in some areas 25, 30% over asking, the fact that they're still going to get, prime dollar for the amount that they're listing is still there. So like I said, I do expect the housing market to pull back a little bit. I personally do have a few rental properties and have been waiting, and I am shocked at seeing some of these individuals scoop some of these rental properties at the prices they have, and just doing the numbers myself and just thinking you are really stretching yourself thin. I have been waiting a little bit, but I do not expect a crash to happen. Like I said, guys, these housing market and the stock market does run hand in hand. All right, investors want to feel secure, certainty, and confidence when it comes to investing. So, like I said, keep this video in the back of your mind over the next coming weeks. Pay attention to the earnings and especially the guidance going forward. All right, some of these big companies, they continue to carry the market. If you look at high growth over the past year and a half, you look at all your speculative companies, I'm not going to get into them, but I'm sure a lot of you guys know them because we talked about them about a year and a half ago. They are down 70, 80%, but big tech, these solid fundamental companies continue to rise. If they report good earnings and good guidance and maintain their 2022 projections, I expect the market to bounce. All right, so guys, that is it for this video. I'll see you in the next one.